Well, good afternoon then, folks, as we head into US trade on Monday, the 31st of July. We'll flick across the headlines, see what we can find. You can see US stock futures inch up as markets ride higher on cooler inflation. So we had CPI prints from, or should I say core PCE prints from the US last Friday, showing a growth of 0.2% over the month of June, which is more in line with the Fed's target of 2%. It is the Fed's preferred metric of inflation. Obviously 0.2 a month ends up at 2.4 for the year, which is closer to their 2% target. So inflation at a more manageable level, but still work to be done. Inflation in the Eurozone dropped again 0.2% in terms of the yearly figure this morning, which we'll have a look around once we get around to the economic calendar. So market's a bit positive on that, but still work to be done. Still 5.3% is still too high, so still more needs to be done, but inflation still continues to cool off, which is the interest rate hikes taking effect. Markets looking more towards potentially no more hikes to come, or certainly not another hike at their next meeting, which is why DAX hits a new all-time high, the Euro stock hits a new all-time high, and markets continue to be supported in Europe off the back of bets cooling down for interest rate hikes to continue. Sterling steady, set for monthly gain. So sterling's obviously been positive over the last couple of months, approaching two consecutive quarters of growth, with UK inflation still rising at the strongest pace in the G8 space. So we do have the Bank of England a little bit later on in this week, which they're expected to continue hiking interest rates. Inflation's still too high, and certainly ECB, if they're considering holding interest rates where they are, I don't think the Bank of England have that sort of luxury, unfortunately for them. Apart from that, there's not really a great deal of fresh information out across markets. We're just looking towards the data, looking towards inflation approaching a peak and seeing where we are at in terms of interest rates stopping. We can see US equity futures slightly higher, European equity futures slightly higher, but not really too much, to be perfectly honest. Asia Pacific equity futures slightly higher, and general positivity in stock markets continues. Look like they want to make a push higher. Yields still slightly higher on the day. Markets in terms of yield continuing to push higher. It's not really the most positive thing for stocks at the moment, but markets don't really seem to care too much. The Australian dollar, Kiwi dollar up in line with some positivity around stocks. Chinese economy with some targeted measures in order to boost growth in China is positive for the Australian and the Kiwi dollar, so that helps push that higher as well. The RBA expected to hike interest rates again this week. So it's some general positivity around the Australian dollar. The Japanese yen has a bit of a pullback from their relaxation of their monetary policy rules. You'd expect the yen to then push higher, but the yen is lower across the board, which is not what they were hoping for when it comes to the price of the Japanese yen from the Bank of Japan last week. So maybe a little bit difficult to work out as of now, but we'll have a look at Japanese yields once we get around to it. Now, in a minute, you can see the economic calendar raft of things out. Nothing too important. GDP figures out of Eurozone this morning, slightly higher than anticipated. So, positive growth in the Eurozone still means that the central bank can't keep the foot on the gas, though. Inflation still remains slightly sticky, 5.3% in line with consensus, only a 0.2% drop from that 5.5%. Core CPI still up slightly on consensus, but the monthly figure, the monthly CPI print, minus 0.1%, and that is what central banks will want to see in order to get inflation under control. So these monthly figures, for me personally, slightly more important than those yearly figures. Apart from that, you can see where markets are across the board. Just have a look at these Japanese yields. Just flick over the over to US. We want JP10Y. My apologies. Click onto that. That is not really what you would expect in terms of Japanese yen downside. You would expect these to be pushing lower, so maybe a bit difficult to read into the kind of moves we've seen across the Japanese yen over the course of today. You'd expect that to be pushing higher, but that has now firmly established itself above that 0.5% range, and if that was to continue to push higher, that is likely to be supportive for the Japanese yen going forward. So I'm not going to read too much into that price action on the Japanese yen today. I still think this is something worth paying attention to, and that pushing higher should be supportive for the Japanese yen moving forward. But you can see across the board, if we just have a look at the US dollar, the US dollar has had a bit of a pullback against the majority of the currency. You can see the Aussie pushing higher, Kiwi pushing higher. You can see dollar CAD then pushing lower, which is obviously your commodity linked currencies. You can see oil continues to push higher, which is a reason for dollar CAD downside. This oil chart continuing to push higher does continue to put upwards pressure on inflation, so something we do need to keep an eye on pushing forward. As we head into the coming days and weeks, the more that continues to push higher, the more pressure it puts on inflation. The strong economic data that comes out, if that continues to be strong, certainly from the US side of things with strong growth last week, plus Chinese stimulus measures being targeted at the Chinese economy in order to boost growth, that then continues to put upwards pressure on inflation and remains tricky for inflation then moving forward. So not out of the woods just yet. Wouldn't be at all surprised to see inflation tick up in the coming prints ahead once this begins to be factored in, but slightly difficult moves to work out in the Japanese yen, not really being driven by yields, nothing really out of Japan. Just a complete reversal of the moves from the BOJ the other day. In terms of equities continue to want to push higher. The S&P, the Dow, the Nasdaq, and the Russell continue to grind higher. The Russell pushing higher off the back of strong growth figures last week. Strong growth within the US economy is positive for the Russell. The DAX, the FTSE, or should I say the DAX and the Euro stocks continue to push to fresh all-time highs. The FTSE rallying as well back to the top of this range, and I'm not going to read too much of that until we break out of this near-term range, but higher lows throughout. Would expect a breakout to the top side, maybe off the back of a 25 basis point hike this week being expected, when there's a possibility for some 50 basis points later on in the week. But some strange moves over the course of today, nothing really clear cut to put your finger on as of why. No, I'm not seeing too much in terms of the economic calendar driving these moves in markets. So a little bit tricky to work out the Japanese yen. No, it's not too tricky to work out. Stock index is pushing higher. So that's what they seem to want to do. But Aussie pushing higher, Kiwi pushing higher. The fact that they're up 100 pips is a little bit tricky. Or good 80 pips is difficult to sort of wrap your head around. Movement in the Japanese yen, difficult to wrap your head around. Yeah, kind of a bit of a discombobulated start to the week. So we'll wait and see how the US session fares over the course of today. But me personally, difficult moves to work out over the course of the day. Are they sustainable? Obviously, remains to be seen. But certainly sideways across euro dollar, certainly sideways across cable. Stock indexes still have levels to break out to the top side, and really they are within recent ranges, as you can see. So again, a little bit tricky to wrap your head around, but we'll try and make more sense of it as we move on through the sessions. But keep an eye on the price of oil moving forward. I think keep an eye on the price of the Japanese yen, maybe some sort of a bounce back off the yields establishing themselves higher. But for me, slightly struggling to work out the reason for the direction as we head into this trading session. So I'm not going to put my neck on the line on some of these asset classes just yet. We are only Monday. We still do have a number of days left in the whole week of trading left for things to sort themselves out. So a little bit tricky to work out as of now, but I mean, long stocks at the moment is not a bad way to play it once you take into consideration the recent trends. As you can see, if you're not sure about anything, not sure about how markets are moving, long stocks on an intraday perspective, not the worst of ideas. So we'll see how markets fare over the course of the US session. Maybe it may make a little bit more sense as we head into tomorrow. But yeah, we'll cross that bridge when it comes to it.